the core inflation has the tendency to pull up or down headline. And if headline does come down to those 2%, but core or other measures of underlying inflation remain very high above the core, it's quite, the target, it's quite likely that the headline will be pulled back up again. So I think core really tells what happens within the economy, how persistent the inflation is, and I think that's a very important element to follow. But as to the rates, how far up would they go? Of course, we cannot tell at the moment. But I would say it's not only how high up into restrictive territory the rates will go, but also how long will they stay there. And currently, I think the markets are making the mistake of thinking that the rates will come down much, much quicker, which in my view is inconsistent with the baseline scenario that we currently have. First half of next year is way too early. I would see personally for the rates to start coming down, for rate cuts to be necessary, is only when we see that inflation does significantly and persistently fall below our target of 2%. Before that, if inflation with these rates, converges to 2%, why should we start cutting the rates?
So, but if you look at your projection horizon, that means not before in 3 years' time, because clearly, currently, you are not projecting that inflation is falling back below 2 before.
Well, our projections, of course, bake in the market expectations on interest rate dynamics. And if the markets are wrong on pricing too early cut in the rates, then of course, the inflation dynamics will change as well. If the rates would stay high at the levels that we would climb up to, then of course the inflation would return to 2% much earlier. Rate cuts, in my view, would also kind of eliminate the policy space that we have gained. And unless inflation does undershoot the target significantly and persistently, I would not see need to rush to cut rates.
In your view, if rates would stay elevated for a prolonged period of time, how fast can inflation drop?
Well, currently, of course, what we see with the very recent forecast that we would attain, well, we would be close to 2% in the second half of 25. If it can happen earlier, I would be more than happy, because having inflation significantly above our target, having inflation especially outside the interval of inattention. Inattention is in a way that if inflation is quite low, then people and corporates do not really bother about it. If inflation is high, they start pricing these elements into their decisions, which has a tendency of inflation rooting in. So the sooner we get back into an attention area for inflation, the easier will it be for inflation to stabilize itself at those 2%, because we know those risks of high and low inflation regimes, and high inflation regimes are destabilizing. Low inflation regimes typically are self-stabilizing. So the sooner we return to 2% around our target, which is symmetric, of course, the better it will be for the economies.